Hi, everyone. Welcome to Screw the Stock Market. Today, we're speaking with Eric Francom. He is pretty awesome. What did you think of the show today, Aziz?
Oh, it was great. It was great. Actually, I think the interview actually ended up being a little bit too short, so we definitely need to have him back.
Yeah,
There's tons of follow-up questions that I had, and various. I mean, he's done a lot of everything, like high-level things. So there's so many avenues of topics and areas of making money and business that you can talk to him about. So look forward to him coming back for future interviews as well. But it was good.
absolutely. I mean, it ended, and then we just had small talk after the recording, and it was so fun. And there was so many tidbits that I wish we had recorded during that part because it was cool. So I think from now on, we
Yeah,
got to just not hit the stop recording thing until like we're really gonna get off because it
yeah,
was valuable stuff that sadly you guys are gonna miss. Sorry, but we'll have him
yeah,
back. The
yeah.
point of the show today. He's talking about his investing in alternative assets, but unlike in addition to real estate, he's doing venture capital and private equity investments, which
Yeah.
apparently are just at another level of kind of home run uh, multiples, and the possibilities of returns are just much higher. Um,
Yeah, the numbers he was giving were ridiculous. I mean, it was amazing.
yeah,
But he's getting in on like the ground floor for like seed round fundings for like corporations and businesses. I mean, you know, think of like the Google and all those things before they were Google and whatnot. Obviously, not all of them are going to be these unicorn mega companies, but they still end up being very profitable companies. And he's able to kind of get in on the ground floor on that. And he started off as just as a dentist to begin with. Not that to say it's
just a
that sounded
dentist.
awful. Just the dentist. No, it's a good profession. So he started off as a dentist and was able to leverage that and his income from that and from selling his practices to something bigger and greater. So this is a really great conversation, really good, especially for those folks in the medical profession who are trying to figure out what to do next in terms of their finances and their careers and their practices and professions. So yeah, definitely, we're happy for you guys to check it out and listen.
All right. Well, without further ado, enjoy the show. We hope you get a ton of value from it, and thank you as always for tuning in. Hey there, thank you so much for tuning into the show. It means so much to me and Aziz that you are actually listening, that there's people really listening to the show. We're having fun with it, and we hope that you're getting a lot of value too. Education is just one of the first steps that anyone should take when they're on a journey towards financial freedom or personal development. And so it's great, you're doing the right things. I want to suggest a second step that you might want to consider if a lot of the things that we're talking about on the show are resonating with you. Consider visiting our website, legatoinvest.com/invest. And there's a button where you can click to gain access to our opportunities. And what will happen is you'll schedule a call with us. We'll talk, we'll get on a Zoom, and we'll get to know your investment experience. We'll get to know you. We'll learn about your objectives. And then if it's a good fit, we'll actually start to present you with real investment opportunities from time to time. And you'll be in the driver's seat where you can say, no, I don't like that one. And yes, I do like that one. And those real decisions, that means that you're actually in the game towards your financial freedom. So consider visiting legatoinvest.com/invest. Again, that's LEGADO invest.com/invest. Hi, everyone. Welcome to Screw the Stock Market, where we talk about alternative investments and building wealth and taking control of our finances and our futures. Today, we're speaking with Dr. Eric Francom. He attended dental school in the inaugural class of Midwestern University. After dental school, Eric owned and operated 4 dental practices. 3 he started from scratch and sold them to a private equity group. Very interesting and relevant. We know some of our audience actually is going through that exact process right now. So maybe we'll talk a little bit about that.
Great.
But after increasing his net worth 4 times since the sale of his practice, and increasing his passive income from $7,000 to over 6 figures per month, Eric wanted to share his knowledge and teach others how to do the same. This is awesome. We're really excited. This is right up our alley. And let's see. So he now manages his wealth and investments in commercial real estate, private equity, and VC funds. Eric also coaches and guides his clients to achieve complete financial freedom through passive investments with Infinite Freedom, his private coaching and mastermind platform at ericfrancom.com. Am I pronouncing your last name correctly,
Yep.
sir?
Yep.
All right, awesome.
Francom, ericfrancom.com.
Well, Eric, thank you so much. We're really excited to have you on the show. It's clear already that we're going to be very much in sync in terms of our values. At any point in the show, if you feel like throwing some hate or shade at the stock market, this is the place to do it. Screw the Stock Market is the name of the show. And don't feel obliged to do that if you don't feel that way.
Yeah, I don't think I have a penny in the stock market. I don't believe I do. I guess some of the exits that I've had from public companies that have sold, I pretty much have gotten those in cashed out as well. So, I should have probably something in there, but it's hard to justify. I don't think anybody's saying, "Hey, I love the stock market right now."
No, not at all. Most people. I mean,
yeah, when we started when we started this show, it was gangbusters, right? And so now we're looking pretty smart as things have kind of tanked. Yeah. But we always kind of recognize that there's plenty of people who do well in the stock market who've done much better than me or Aziz have, but we just are very much inspired by people who do it kind of the way that you've done it. So we're really excited to talk to you and meet you. Tell us a little bit about yourself, where you got started, and tell us about your journey.
Well, thank you. Yeah, it's great to be here. I have always kind of been an investor since I was putting just a little bit to the stock and bond markets and just getting bonds as a kid. And I bought my own real estate and rented it out to my roommates for college, and just kept the rental afterwards and bought several other single family rentals, had my dental offices, and that's where a lot of my investments were. I did the whole stock and bond thing. I had, I was proud to serve in the military. I have my thrift savings plan and all of that stuff. So yeah, we've seen a great run in the last 10 plus years now, the longest bull run in the history. But even with that, I talked to a lot of bigger organizations. I know there's places like Texas A&M and some of the big, like Cook Hospital, and different places that have good funds to invest, and they've stated we've really made our money in private equity and venture capital in the alternatives. And this is the way that the ultra wealthy invest, right? And there's just so many people that are in a 60-40 stock bond split because their investment advisor told them that, and they don't even get into real estate. And I really feel like the research has shown that the ideal portfolio has about 30% in private equity and venture capital type investments as well. So that's what I help people with, is the real estate and the venture capital and private equity investments that are really the ones that tend to make the most money historically. That's why so much smart money is converting over to it. So in my group, I just bring a massive amount of really good top quartile and top decile deal flow so that people can pick between good deals. That's where you usually make the best decisions, is when you have great ones to choose from.
Now, just to kind of clarify for our audience, if they're not too familiar with the terms, can you define the difference between private equity and the venture capital?
They're hard to really define, even like late stage, venture capital and early stage private equity. There's not really much difference. So, venture capital is going to be more of the early deals. You're going to invest in more of the seed rounds and early, whereas private equity is bigger. But yeah, there certainly is some overlap, and I've not talked to any professional that can differentiate where the one ends and the other begins. But yeah, so venture capital more early stage, private equity more late stage, more established.
Yeah, and I think in terms of venture capital, it's predominantly focused on companies and businesses, whereas private equity can just be just about anything.
Yeah. Yeah, the private equity, that's the goal of venture capital, is for private equity to buy them up or for them to go, eventually public, but one of the two. So that's kind of the progression that it grows up through.
Very interesting. Okay, so on this show, because of our own kind of background, we've always talked a lot about these topics within the context of real estate. So investing in a syndication or investing in a fund. Can you tell us a little bit about some of the differences between investing in a syndication or a fund or doing venture capital or private equity type investing?
Well, just the same thing, where you can invest in a syndication or a fund for companies as well, and that sometimes is a really good way to go. No one knows when the next what the next Uber is going to be or the next Airbnb. There are some different companies or different funds that I do invest in that have more of a spray and pray approach, where they say, hey, we're just going to buy up 1,000 startup companies and diversify across them. They still pick the ones that they like the best, but there's 1,000 of them. And they know that 90% of them are going to fail. But the 10% that make it are going to outweigh the gains so much that predictively they've had a 10 times return of investment over about a 7 to 9 year period.
That's real money.
That's real money. So yeah, I mean,
they'll do that
any one
while
company
losing.
What's that, Alex?
They'll do that while losing 90% of the time.
Yeah, while losing 90% of the time. And then there's another fund that I invest in that they are completely opposite. They're very strategic. So they invest in companies that are off of Silicon Valley that have enterprise, recurring revenue. So they have over $1 million in enterprise sales from business to business, and they essentially buy them after their Series A round, the ones that they really like, and then they sell them before the Series B round. So they negotiate that their terms that they can go out as the bigger money's coming in. So really, we're in a really good niche where we're below the level of where a BlackRock is. They don't write checks sometimes as small as some physicians and business owners, and even people that have tens of millions or even hundreds of millions of dollars can find really good opportunity flying below that radar. So we basically buy it up. The companies that we buy in the Series A round have Fortune 500 companies that are their customers that are dependent on their software with 5-year or longer contracts. So it's almost impossible. I mean, you can never say never, but it's very difficult for them to fail when a Fortune 500 company is paying their money. It's very stable. And so we get in and get out with a consistent 3 to 6 times return on investment on those companies. And we let other people hunt for the unicorns, finding out where the next Uber is going to be.
Now, what's the normal buy-in for these types of things? Because I think most people are just going to assume I have to be a multimillionaire to get in on the ground floor during a seed round.
That's a great question. So that's a lot of where I really help to bridge this gap. A lot of times the minimum check size can be $1 million, and you don't want to typically have more than 5% of your investment in any one area. So unless somebody has $20 million that they're willing to invest in that type of a fund or more, then it doesn't maybe make as much sense. But we can negotiate them down to $50,000, and then we come in together as a group so we can meet the $1 million minimum, and the company's happy, and we can get in and not have to be overstretched. And a lot more people have access to that kind of a deal. And sometimes it's even less. Sometimes we can get 25,000 or even 5 or 10,000. But I'd say 50 is a pretty typical number.
Yeah, that's normally what we see between 20 to 50. Sometimes 100,000 on the higher end. For most funds.
Real estate, sometimes you can get a little lower too. That also does help. Or the co-investment. So if somebody really likes one of the companies that's in the fund, then they might be able to put a smaller amount into that individual company.
Right. Yeah, I think that's one aspect that I think intimidates a lot of people in terms of this. Because when you think about any type of venture capital or private equity, everyone just automatically assumes this is the realm of big business and tycoons and most middle income or even upper middle class folks think that this is outside of their ability to kind of buy into, but it is. I mean, you can save up $50,000. I mean, it'll take you some time if you're doing day-to-day life and whatnot as a normal Joe Schmo, but it's doable.
Yeah. Well, and that's partly why I created my fund as well. It's called the Infinite Freedom Fund. This is kind of peeling the corner back. I haven't really announced it, so here it is. More of the public announcement. First. I wasn't even planning on talking about that, but here we are. So, it basically is people that only have maybe 500 or 50 or maybe 100,000, rather than them saying, hey, I'm going all on black, to use a roulette gambling type of an analogy. They can say, okay, I'm going to get a littler piece of all of these companies, and it's just going to be the same percentage as I go up. So I project, there to be about a 5 to 7 times return on investment over probably a 5 to 7 years time as well. That's the projection for our fund, and I'm really hoping it's going to be a lot higher, because we have some real estate in the fund, which is not very common for a venture capital type private equity fund, but it balances it out, gives it a little stability, so we can really shoot for the stars on a couple of these that we call home run balls, that we think, even though they still have some downside protection, we really think these can do well, and we can take more shots because of that stability. So I'm really hoping to have over a 10 times return on investment. And of course, like, this can't be construed as financial advice, and all that, all the normal disclaimers, like always seek the counsel of your attorney and your accountant before you invest in anything. Yeah. But the principles are very real.
We need to have a disclaimer at the beginning of every show. It's been on my to-do list for a long time. We just never get around to it.
It's just an informational, educational show, so people know.
Yeah. We'll just replay this little clip over and over again.
There you go.
Eric, you did our disclaimer for us. Thank you.
Nice.
Now, I want to take it back a little bit, just to kind of see, like, you touched a little bit on how you got into this world. Can you get into a little bit more detail? You started off as a dentist. How do you transition from a dentist to just full on now, managing your own fund, deeply entrenched in the VC and private equity world? Can you go into a little bit more detail? Just kind of like, what's a trajectory that other people in similar situations can follow to kind of like get, learn more about this type of world, or even kind of delve and, dip their toes into it initially, if they want to be like fully active as opposed to passive?
Yeah, that's a great question. So, unless people are independently wealthy or had, some kind of trust fund, then we usually have to earn a bit of our money before we invest. So we have to start somewhere. I was just, over at the gym, and, I was thinking about how a lot of amateur just bodybuilders, or not even bodybuilders, just people exercising, we tend to exercise and lift with similar programs that the top bodybuilders do. We might not be as disciplined to eat as, disciplined, or we might not go to the gym as many hours, but a lot of the principles are the same. They tend to lift like the pros do. When it comes to finances, that's not the case. The total masses, they go with what their investment advisors say, go into these stocks and bonds. This is secure. This has worked in the past, but they don't have what I think is the very best part of the entire portfolio, and that is real estate, and then the private equity and venture capital. That's where the ultra wealthy invest the most. I advise I'm a mentor for the Harvard School of Business, where they're creating, the students that are creating actual companies out of the class, and I'm proud to volunteer to help them and to give any guidance and whatnot I can. And I've heard on good word, so you can't quote me, but that even the Harvard Endowment Fund only has about 5% right now of its total fund in public type investments, the public stocks and public bonds. So, this is the way that the ultra wealthy tend to have at least 50% in stocks outside of stocks and bonds, like in real estate and other alternatives. And so I kind of made that journey. So I kind of took that and ran with it, Aziz. And I know you were going to ask me something else there.
No. I was going to say, just going to the Harvard endowment. I know that they have a multi-billion-dollar endowment. I think a few years ago when I last read, they have at that time, I'm sure it's bigger now, they had $30 billion in their endowment. So if only 5% of that is in, the normal, what we call the stock market, and the rest is in, private equity and venture capital and whatnot, that's insane. That's a real testament to this is the true path towards building wealth.
And they might, in a different market, they might have a little bit more of a percent in the public, but either way, it's not going to be the majority, like the way that most people invest, especially once somebody's an accredited investor. So they either have, $200,000 a year they make, or $300 as a family, or have $1 million of net worth that they can invest. Then they can invest in a lot of these great deals. So because most people can't invest in those type of things, there's a different supply and demand. So there's a lot more demand for people to invest, and they also get better terms. So yeah, that's a good way to get on the fast track. And so how I did it is I sold my practices. I had always been an investor. I had invested in the stock market. I had kind of dabbled, but when I wasn't afraid to invest in myself and I became part of some groups, and I hired some very expensive one-on-one coaches. They've been the best investments of my life. I don't even look at an investment. I don't consider it for my own portfolio unless it's projected to be over 36% year-on-year return, and a lot of them are higher than that. And with the law of 72s, 72 divided by the interest rate is the amount of years that it will double. So 72 divided by 36 is 2. So every 2 years, that will double in value. Statistically, something's going to go wrong. Ray Dalio, Warren Buffett, everybody's had a loss in their portfolio. So it doesn't mean that everything's going to go that way. But I have so much deal flow that I connect, clients and people with as they just dissect the deals that I go into that, they can join those deals if they want to as well. And they can raise their standards as far as, the high returns that they can expect.
Awesome.
Yeah, it's
awesome.
Spectacular.
Now, okay, so we've talked a little bit about the investment kind of thesis that you talked about. Now, one of the questions that I'm very interested in this world and in real estate too is the idea of due diligence, right?
Yeah.
So someone comes to you and says, "Hey, I have this great opportunity." What is your general process for vetting the opportunity and analyzing it and seeing if you believe in these people? Because I think in this world, people and the trust of who you're investing in matters a lot, right?
Yeah, that's a great question. So, there was a study that came out that basically said that about 40 hours goes into a venture capital, fund buying up a company. That's about how much time they spend. It sounds like not very much, realistically, when you think about it, especially with that top money, sophisticated money. But they have a lot of resources. It does feel good when you're invested alongside venture capital money and the big money, and those institutions are coming in. That's not to eliminate your due diligence, but it is something that does make you feel a little bit better. If you got somebody that's just going to people on the street saying, "Hey, do you want to invest in my deal?" It means that somebody sophisticated has already told them no. So the kind of deals that I find are ones that people really don't even hear about, or that really are not available. Can I tell you about one of my favorites that just kind
Please.
of has some cool things? So especially, I know you guys have a ton of real estate and background in that regard. So in this case, this company was given a 300,000 square foot building by the state and city that they were going to. I have some non-disclosure agreement, so I can't go into some of the, revealing information without an NDA signed. But as far as they got this for $1 a square foot for the 300,000 for a 55-year lease. So, and that $1 a square foot didn't even kick in for years, and they did the build out costs. The government did the build out costs and all that stuff. So they took this old building, and they charge it out for $110 a square foot. That's 109 of that is all profit. So there's value to that lease. That lease, there were some companies that were looking to buy that lease, and it was something about $55 million that was the value of that lease. So some states are trying to attract technology. They think that California is having all the fun, and they're saying, "Hey, why can't we do some of that too?" So not only do these tenants pay as a real estate play, that's just the beginning, but they also pay them to use the engineers and whatnot that are shared around. Some of these people came from Google and did the research that after people get all of their candy bars and nap time and massages and all the stuff that the engineers would get at Google, it's about $500,000 a year for an engineer. So some of these companies, they might spend about $1 million, which would be the cost of about 2 engineers and nothing else. And they get access to about 40 different engineers that can work on their projects. And they can attract the good engineers because they don't want to go to work for some of these companies that they deem as boring. They want to work on innovative projects that are helping the world to grow. And so there's a lot of this deep technology that they're facilitating. So they're getting paid by real estate. They're getting paid significant fees. So they have no real overhead because their people are covering everything. And if for some reason they lost, tenants, they would just let some of the engineers go, which is not going to happen because they turn away 92% of the companies that apply to be part of them. And then after they go through their program with them, then this is where their biggest source of revenue comes. And that would be they partner with those companies, and they might take 20 to 25% and say, okay, we believe in you guys. I just told you the 40 hours that they, spend typically to look at a VC company. This company gets to spend 40 hours a week for 52 weeks a year before they decide the top of the top of the top that they're going to partner with. And so they take the top of the top there, they partner with them. Some of these are going to become unicorns, $1 billion or more, and they're going to own 25% of it, all while having profit along the way, not just no downside, but profit along the way. So why would they need investors? And the answer is they don't. But what happened is these founders, they're all in, like they have all of their money tied up into this, and that's very atypical. I mean, there's formulas, it's just industry standard that you're diversified, right? So they're selling some of their secondary shares, and I have exclusive access to be able to connect people with those secondary shares. So, investing in them at the round was 75 million. So that's not very different. And probably with inflation and, the kind of the last couple of years, it's probably worth closer to, 70, 75 million on that lease. So that's kind of like your bond note, right? That's a very high floor on an investment that has unlimited potential on the upside.
That's
Wow.
insane. That is an amazing deal.
I love it. Yeah, they have 7.5 years of cash, working capital in their checking account. I mean, there's nowhere for that to go but to either, dividends for their investors. They're actually replicating too. They partner with some other big companies that have taken the risk on the real estate in other places. And again, if something ever went wrong, they unplug and go home with no overhead loss. They don't have to put their own, company at risk, but they can multiply. They're helping people in different countries. They're solving problems for, water solutions for, the people in Africa. They created a very affordable respirator that saved thousands upon thousands of lives when they said it couldn't be done during COVID in a very short amount of time. It's just, as investors and entrepreneurs, we really get paid to make the world a better place.
Yeah. That actually resonates with us too. Alex and I actually have a background in international development as well.
Awesome.
So
did not know that. That's great.
Yeah. So that resonates, but it also makes me just reevaluate my life. I'm like, Alex, what have we been doing? It makes our deals look like nothing.
Well, the real estate deals are, they're a hedge to me. I don't use them as my bread and butter. I do those to hedge my private equity and venture capital investments. So I don't have everything all in one bucket. But I've gotten to the point, we talked about this a little bit before this podcast, that a lot of people get into real estate and they've had great success with it. And so they double down and double down and double down, but they're missing out on a lot of that private equity and venture capital that the ultra wealthy and the endowment funds invest in.
Very exciting. So, okay, so now what would your initial message be, right? If for the listener out there who's watching right now or listening to the show, and they say, okay, I'm interested in this. One of the first steps whenever we talk about real estate or any of the things that we talk about on this show is education, right? Before you start throwing money at something, there is a certain level of knowledge that you need to have.
Yeah.
I'm assuming that you do offer some of that at your website or on your platform, but tell us a little bit about some of the basics that someone should feel comfortable with before they start throwing money at something like that.
I have spent millions of dollars on my own knowledge outside of dental school, specifically to this investing and growing and whatnot. And I've been more aggressive than most in spending a large portion of my funds into growing my knowledge and network. But those are the two things that nobody can ever take from you. The most valuable thing on this planet is knowledge and information. And I had a mentor once that said, you can't pay too much to rent somebody's brain. So kind of what I've done is I've created a program, and I still continue to invest in myself. I was fortunate enough to go down to Necker Island, Richard Branson's private island, and spend some time with him and a very just elite group of other people that were there, and just I learned so much from him, and spending time with just other big names and other lesser known names as well has helped me to really build my knowledge and my network. And I teach others in my group. I have both private clients that are people that are wanting to do a higher ticket type thing where they need more one-on-one attention and say, hey, I want you to hold my hand and go through this with me, teach me, accelerate my knowledge much, much faster on a one-on-one basis. And then we have a lot more people that do a mastermind setting where we come together and we either in person or on Zoom, we'll get together and we'll talk about each other's investments. I bring them a lot of deal flow that I show that I have invested in. If they choose that they want to invest in those as well, they do. But you can either try to reinvent the wheel, or you can go to people that have done this before. I bring on a lot of specialists and guest speakers, people that have been, in for decades in, venture capital, and just some of the brightest minds, some of the people from Harvard, and, people from some of these VC funds, and we talk about what the companies like and are looking for. And so that can really just get your knowledge to where in a fraction of the money and a fraction of the time it's taking me, I can pass along the things that I know much sooner and much less expensive to people. So yeah, you'd mentioned my website. It's just ericfrancom.com. It's not a lot of Francoms, but it's ERICFRANCOM.com. And you can find out more about it if you're interested in the Infinite Freedom Fund or even joining our mastermind. There's nobody that has ever joined it that has regretted it. We really get along well. We have a good screening process because we have a strict no jerks allowed policy, but we have a lot of fun time while getting paid to make the world a better place.
That's actually resonates really well, because that's something that we always kind of, the exact same message is something that we always tell people. It's invest in your education and then invest in your network as well. Those mastermind classes, the coaching sessions, whatnot. That's, I mean, not only do you get the inside tips, but you also get into this community of people that you can work with, you can network with, and you can't do this alone. I mean, you need a community to kind of interact with and bounce ideas off, share deals, all of this stuff. The path to building wealth really is a collective effort. It's not a singular action. So that resonates. And I want to also go back, because you just kind of slid that in the middle of the conversation. Necker Island, hanging out with Richard Branson. How is that? It's not a common thing. You don't just slide that into the conversation and just not expect a follow up.
Well, if I was a dentist practicing full time, I wouldn't have been able to do that. I think that one of the most valuable things that's happened to me is getting white space. Having both creativity time as well as time to be able to jump at opportunities, even if they're a last minute type thing. And so anyways, I did have the ability. It came up as a last minute type thing. A company I was invested in had a connection with Virgin Unite, the charity that Richard Branson owns and operates. And, they were spending the time down there, and it just came up, and they said, we actually have a spot. Do you want to come join us? I'm like, yeah, of course. I've always wanted to do that. Tony Robbins wrote about it in his book, Money Master the Game. And ever since then, I've been like, yeah, I really want to go to Necker Island. I'd looked at maybe, taking my own little trip with people where they kind of rent it out as more of a, like a hotel type place, but they don't really get to spend time with Richard Branson. This group, Richard was with us the whole time. We went to the Temple of the Elders that they have there, which is formed by him and Desmond Tutu and Nelson Mandela and Jimmy Carter and several of these people that have literally prevented wars. And he's talked about some of the wars that they've prevented by working diplomatic solutions with leaders. And, he told us about, one thing that he said that really resonated with me was, like entrepreneurs and investors earlier in their lives, they improve their community and their families' lives, and later in life, they change the world. And you can change the world, and it's more in your reach than you might think. But man, it was just so fun being out there with him. I got to go play tennis with him, and just you'd be amazed how good he is at cycling. And the young bucks, we couldn't keep up with him. So
yeah, he looks like he's very active in general.
He really is.
Yeah.
Yeah.
Oh, that's amazing.
Amazing. How cool.
We're going to be going back there with one of the investments that I'm invested in. There are several A-list celebrities that we're partnered with. People like Justin Timberlake or Tim Tebow and Serena Williams and Jennifer Aniston and Oprah. We're invested in some of their companies, and several of these A-list celebrities that are part of this fund we're going to be doing our retreat at Necker Island. So we're going to be there with several of the A-list celebrities that decide that they want to come as part of our limited partner or investor, retreat that we're having on Necker and Mosquito Islands. That's the one that Elon Musk and some of the Google founders, live on. That's kind of the closest thing to Necker. So yeah, we have a lot of fun. And it is about having freedom and fun, not just about finances in our group.
So if you need seat fillers, Alex and I are available at any time.
Hey, there actually is a little bit. If you guys are looking to, if you wanted to check out that investment, we could, certainly talk offline, or, be more than happy to introduce that fund that you guys might be interested in. So might some of the listeners. But for the people that are invested in there, like I said, it's fun and exciting to be partnered with them, but we certainly can't do an investment if it's not a great investment. You can't get caught up in the hype, but I wouldn't do the investment if I didn't think it was great, and I'm really excited about that one.
No, it sounds like amazing.
Yeah.
Amazing. Well, Eric, thank you so much. Is there any other words of wisdom or any other message that you'd like to convey to our audience before we end the show today?
Again, it's infinite freedom is about having freedom with your finances, with your relationships, with your time. And a lot of us are stuck in the rat race, trading money for time. And the biggest thing I would say is to have a good balance, to let your money work for you rather than you working for your money. So your mindset would be the only other part of that. And that's the quickest one that we can gain, right? Because you can have a lot of that freedom now. Raise your standards and know that you don't have to settle for less. Know that you're worth it, and you can invest in these great things, and they will appear. I mean, if you get some good coaching, you read some great books. But to enjoy the mindset of you can be free now. You don't have to go to a dead-end job. Don't settle for it. Go to do something that does move your soul. And if you are happy, then success will be added unto you. And usually we think it's the other way around. Hey, I'm going to be successful and then I'll be happy. I'll be rich and then I'll be happy. I'll be, in great health and then I'll be happy. But the science has shown we're happy and then we get wealth and health, and our relationships improve. So there's a book called The Happiness Advantage by Sean Acor. He's a Harvard guy from Texas as well. And I would recommend that to anybody that goes through that principle. But that's a lot of what we go through in our group, and there's a power in the group of infinite freedom. So that's kind of the message that I would have to just say. If I only had one thing to say, that would be it.
Thank you so much. Thank you, really, Eric. This has been really exciting, really inspirational, really educational, and we have never had this topic on the show. So really, we're just so happy to have had you on the show, and we are going to keep in touch. So thank you so much. Really.
I look forward to it. Thank you guys for having me on. I really appreciate it.
No problem. Thank you for coming.